Welcome back. Let's head down to New York Stock Exchange and check in with Yahoo Finance's Jared Blikre. Jared, very high-quality pun on your part with those snowflake earnings. Had to.
I appreciate that. In fact, just piling on here, I liked yours as well. But let's get to the Wi-Fi Interactive, where we had the S&P 500 just climbing over a minor Rubicon, if that term even exists. That would be the 4,400 level, and that's a level I've been talking about for the last several days. A close above it is a step in the right direction for the bulls, because you take a look at, let's take a look at the 1 month price action on an intraday basis. Guess what? This is the beginning of a short-term uptrend. Now, how far does it go? Nobody knows just now, but again, watching that into the close today. Also taking a look at volatility, the SIBO VIX volatility index back below 30, so it's nice to see that. And also the BAML move index. I'm going to put a line chart on here and also go back 3 months so we can really see the increase in bond volatility here, so just ebbing ever so slightly. Now we are seeing a slight uptick in yields. We're looking at the 10-year. Looks like it's up a whopping 1 basis point, but we got some notes from Citi to talk about in a minute, and the implications for that for the equities markets. And here's the US dollar index marching a little bit higher, but fairly quiet as well. Now, what I don't like about the sector action today is it's very defensive so far. You're seeing staples, that's up in the upper left, and utilities, real estate, healthcare, all of those are the major outperformers, and that's just kind of a defensive setup that you don't want to see when markets are supposed to be heading higher, noting that energy too is the greatest laggard. Just going to finish off here, take a quick look at the NASDAQ 100 heat map. Not seeing a lot of outstanding movers either to the upside or the downside. Datadog down 4%. That's about it, guys.
It's not it, though, in terms of what we're hearing from some strategists on the street, right? Citi out with a note this morning, changing its recommendation for U.S. stocks and global tech and getting more optimistic, I guess.
Yeah, it's about time. I've been saying for a few weeks, I think the next up leg in the market, the overall market, if that's what's happening right now, if we get some continued momentum to the upside, I think that's going to be based and favoring global tech here. And specifically just because the yield curve has come down so much that it might be ready for some kind of a snapback effect. We'll have to see what happens there. Generally, when yields come down, that favors global growth. I will say Goldman Sachs, I was reading one of their notes and talking about it on here yesterday, that means that they think yields are going to climb back up, and so that would be better for value. Nevertheless, I think if we do end up marching back to those highs that we saw earlier in the year, at the very beginning of the year, probably going to be a pain trade for value. I think every sector, every style is going to have its moment in the sun this year, and it's just going to be a massive rotation from one to the next as we keep trying to digest all these bombshells that keep coming our way in terms of headlines.
Jared Blikre is staying hot for us on Snowflake earnings crash day. Thanks so much, Jared.